Ladies and gentlemen, welcome to the September quarter 2014 Cadence Capital Limited webcast. As usual, on the first slide we show the gross performance for the fund for the quarter, and particularly for the month just gone. In the month just gone, the fund was down 2.7%, but the market was down 5.3%. And the fact that we're only down half as much as the market is related to the fact that we're holding quite a bit of cash and have a very conservative position portfolio at the moment. So for the year, we're up 10.7% against the market that's up 5.9%. And our longer term numbers are about 18.4%, and the market's up about 6%, so we're up about 3 times the overall market. The outperformance has taken place over an extended period of time, and as always we caution people to look at to look in too much detail at the short-term numbers. The following slide people will be used to seeing in the newsletter as well, which shows our dividends that have been paid over time, 59.2 cents of dividends and 7 cents if you include the franking. That equates to about a 6.8% fully franked yield based on the current share price. Most people would have just received the 5-cent dividend that was declared on the 30th of September 2014. The final slide relating to our performance shows the performance of our share price, along with the dividends, along with the franking attached to the dividends, and shows that over an extended period of time to give a different picture of our performance. And we also have been ranked number 1 recently by the Australian Morningstar ranking process over 5 years, and we're very pleased with that. Finally, the slide that appears in our newsletter as well are our top 20 shareholdings, which remain largely unchanged over time, although we have been asked a lot of questions about the Gilead Sciences position, which has grown over time. And I'm joined today by fellow portfolio manager Simon Manouvre, and we're going to go into that position in some detail. The backdrop to investing for the first time in overseas shares is that we did say to people in our AGM last year that we were starting to look for opportunities offshore, and we already have quite a sprinkling of overseas exposure in our portfolio. For example, Macquarie Bank derives 74% of its revenue from offshore, and Henderson, one of our bigger positions, derives 94% of its revenue from offshore. Macquarie Bank in particular is growing that percentage of revenue offshore, and has also indicated recently that a large percentage of that revenue is also annuity style revenue, so that we're seeing an increasingly growing revenue stream that's both annuity style and offshore. Turning more specifically now to Gilead Sciences, I'd like to introduce Simon and let Simon talk to the position in some detail.
Thanks, Carl. Well, Gilead was our first offshore investment, so it's US listed in the United States. It's a global company, and I'll just tell you the market cap of Gilead is 150 billion US, so it's larger than any of the big 4 banks here in Australia.
Yeah, we were laughing about that the other day because a few of our shareholders have said, oh, well, what is the speculative biotech company? I mean, it's actually a very big company.
That's right. So it's in the space of biotech and pharmaceuticals. It's got strong cash flow, strong revenue, strong profits. It's on a PE of 10 times. It fits Cadence criteria from a fundamental perspective, and from a technical perspective, the stock's been in a solid uptrend for the last few years. So I started buying the stock when it was about $80 US, and I put 1% of the fund in there, and I've added to the position another 4 times since it's appreciated in value, and it now represents approximately about 5% of our fund.
And that was one of the positions from another questions from another shareholder, was how did this become such a big position? It's simply because the stock's performed so well, and we've been scaling into it.
It has performed. I think it's totally justified because earnings this year are increasing by 300%, which is quite a large jump, and then the following year after that I forecast earnings to rise approximately 20%.
And you just said that it was on 10 times earnings. That's presumably, is that next year's earnings?
That's it's forward earnings, so it takes into account that 300% growth. So I'm looking at the growth thereafter, which I think they could possibly do 20% plus growth for the next 3 years.
Why then such a low multiple? 10 times. Our market's on 15, 16, some stocks are on 18 times earnings here, and they're not anywhere near that's market cap.
That's right. So the reason they've had a huge jump in earnings is due to a new product in the hepatitis C space. It's called Sovaldi, and it's basically a cure for hepatitis C. And it's a blockbuster drug. There's over 3 million people in the United States with hepatitis C, and globally, there's over 170 million people with hepatitis C. So this drug, if you take it for 84 days, it completely cures the person, most people I should say, of hepatitis C. So it's a blockbuster, and in terms of forward earnings, I forecast it will probably make up about 40% of their P&L for the next couple of years. And because of that, because one product makes up such a large portion of their P&L, I think that's the main reason why the stock's on 10 to 11 times earnings.
But we would hope to see a PE expansion for that valuation to expand.
Possibly. The other biotechs in the sector trade on anywhere between, say, 20 and 30 times. Even the large, well-established pharmaceutical companies, they trade on circa 20 times earnings. So I think with this stock, there's potential for earnings upgrades plus some multiple PE expansion, which should drive the stock performance.
I mean, obviously Gilead Sciences is your stock, but the thing that I also like about it from a portfolio manager point of view is it's a very big market cap stock. It's a US stock, and it's not a stock that we could get exposure to locally here. So it gives us quite a bit of diversification from an overall point of view.
That's right. So a lot of the biotech companies here listed in Australia, most of them aren't actually making any profits. So the ones that are listed in the US, they're big global companies. They're larger than most of the large caps here listed on the ASX, and they've got strong, predictable revenues and cash flow.
And I guess that's the challenge for us going forward, is just to look around the world to find particular stocks with particular opportunities that reduce our overall risk by giving us diversification and that kind of metric with that type of earnings growth at those kind of valuations.
That's right. So, the aim's to buy stocks that are growing strongly, yeah, with predictable revenues, strong balance sheets, good cash flow, and that are trending higher and on reasonable valuation.
Well, I'm pleased to say it looks like we've got the first one for our shareholders, and that's actually really good news. So thank you very much.
Thanks.
Now, just turning finally to the slides that we once again usually present in our webcast, and that is the updates that are available on our website. I always strongly encourage shareholders to go to the media section of our website and to see where we have appeared in the media in recent months, and particularly in the last month we've been in a lot of things. I'll just point shareholders to the Cufflinks Cheap Stocks article on our website, Business Spectator Alan Kohler web article, the Australian Busting Industry Myths, the Australian some work we did on Macquarie Bank, as well as an essay that we wrote in the Morningstar journals on cash flow and why that is so important in investments. I would really encourage people to go and have a look at those articles on our website, and if you do want to visit our website and join our newsletter and are not currently doing so, please join the free newsletter service which is available. Ladies and gentlemen, thank you very much for your time again watching our webcast, and for any further information please visit our website or send us an email at info@cadencecapital.com.au. Thanks very much.